Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into the hottest stock of the generative artificial intelligence era, Nvidia. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Nvidia, ticker NVDA, has taken the spotlight as the frontrunner in the generative AI boom. The company, known for its high-performance graphics processing units, GPUs, and AI hardware, has seen a meteoric rise in its market capitalization, adding over $2 trillion since the launch of ChatGPT. Nvidia's stock has soared by approximately 700% since the beginning of 2023, outpacing every other stock in the market. But what makes Nvidia such a game-changer? And why are some investors starting to sell their shares? Let's dive deeper. Early adopters of this trend, including several billionaires, recognized the disruptive potential of generative AI and invested heavily in Nvidia. However, recent trends indicate that these early investors are now reconsidering their positions. According to hedge fund tracker Whale Wisdom, more top investors reduced their stakes in Nvidia during the first quarter of the year than those who increased them. Specifically, 207 hedge funds increased their holdings in the first quarter, down from 269 in the previous quarter, while 336 hedge funds reduced their stakes. Prominent billionaires like Ken Griffin of Citadel, Israel Englander of Millennium Management, and Paul Tudor Jones of Tudor Investment Group were among those who trimmed their Nvidia holdings. This pattern suggests a growing fatigue around the stock, prompting these hedge fund managers to lock in their substantial profits. So why are these high-profile investors selling Nvidia? While their 13F filings don't provide specific reasons, comment your thoughts below. Firstly, taking profits seems like a prudent move, especially amid discussions about potential increases in capital gains tax rates for the wealthy. For example, Warren Buffett, CEO of Berkshire Hathaway, cited this reason for selling shares of Apple earlier in the year. Secondly, the competitive landscape is intensifying. Companies like Advanced Micro Devices, ticker AMD, and Intel have introduced rival data center GPUs, while tech giants like Meta Platforms and Microsoft are developing their own AI-capable chips to reduce reliance on Nvidia. Stanley Druckenmiller, another billionaire investor, explained that much of the value his firm saw early in Nvidia has now been recognized by the broader market. This sentiment reflects the consensus that Nvidia's dominance in the AI chip sector and its rapid growth trajectory are now widely acknowledged. So what are these hedge fund managers investing in instead of Nvidia? Interestingly, one of the popular choices has been Ford Motor Company, ticker F. Citadel, Millennium Management, and Tudor Investment Group all bought significant shares of Ford in the last quarter. Citadel acquired 5.45 million shares, Millennium Management added 7.34 million shares, and Tudor purchased 1.76 million shares, making Ford one of their major buys. Despite recent struggles, Ford is positioned at the intersection of several favorable trends. The slowing demand growth for pure-play electric vehicle (EV) makers has shifted attention to traditional auto stocks. Although Ford's EV business has yet to turn a profit, the company is seeing success with its hybrid vehicles. Additionally, an anticipated decline in interest rates later this year could make cars more affordable, further boosting Ford's prospects. Ford also has growth potential in areas like EVs, hybrids, and autonomous driving technology. The stock is currently trading at a forward price-to-earnings ratio of 6, which is considered cheap. However, the low valuation reflects investor concerns about competition from fast-growing rivals like Tesla. For investors looking to rotate out of a high-growth stock like Nvidia and into a cyclical dividend stock with upside potential, Ford appears to be an attractive option. Its dividend yield stands at 5% at the current share price, offering a stable income stream. Now let's take a closer look at Nvidia's journey and the reasons behind its spectacular rise and recent slowdown. Nvidia was founded in 1993 by Jensen Huang, Chris Malachowski, and Curtis Priam. Initially, the company focused on developing graphics cards for gaming. Over the years, Nvidia expanded its product line to include GPUs for professional visualization, data centers, and automotive markets. The company's breakthrough came with the introduction of its CUDA platform in 2006, which allowed developers to use Nvidia GPUs for general-purpose computing tasks. This innovation paved the way for Nvidia's dominance in the AI and machine learning sectors. Nvidia's GPUs are now widely used in various applications, including gaming, data centers, automotive, and professional visualization. The company's AI hardware, such as the Tesla and DGX systems, is used by major tech companies, research institutions, and government agencies for AI and machine learning projects. Nvidia's GPUs are also essential for training large language models, like OpenAI's GPT-3 and GPT-4, which power applications such as ChatGPT. The launch of ChatGPT in late 2022 marked a significant milestone for Nvidia. The generative AI model quickly gained popularity, driving demand for Nvidia's GPUs. As a result, Nvidia's market capitalization soared, and its stock price surged. Investors were drawn to Nvidia's leadership in the AI hardware space and its potential for continued growth. However, the rapid rise in Nvidia's stock price has also raised concerns about its valuation. Some investors believe that Nvidia's stock has become overvalued, prompting them to take profits. This sentiment is reflected in the recent reduction in Nvidia holdings by top hedge funds. Another factor contributing to the sell-off is the increasing competition in the AI hardware market. Companies like AMD and Intel are challenging Nvidia's dominance by launching their own AI-capable GPUs. Tech giants like Meta Platforms and Microsoft are also developing in-house AI chips, reducing their dependence on Nvidia. This growing competition could impact Nvidia's market share and profitability in the long term. Moreover, the broader economic environment is influencing investor sentiment. Concerns about rising interest rates, inflation, and potential changes in tax policies are prompting investors to reassess their portfolios. In this context, some investors are choosing to rotate out of high-growth stocks like Nvidia and into more stable, dividend-paying stocks like Ford. Now let's explore why Ford has become an attractive alternative for investors. Ford is one of the oldest and most well-known automakers in the world. Founded by Henry Ford in 1903, the company revolutionized the automobile industry with its assembly line production method. Today, Ford is a global leader in the automotive market, known for its wide range of vehicles, including cars, trucks, SUVs, and commercial vehicles. In recent years, Ford has been focusing on its electrification strategy, aiming to become a leader in the EV market. The company has introduced several electric and hybrid models, such as the Mustang Mach-E, F-150 Lightning, and the hybrid version of its best-selling F-150 truck. Despite facing challenges in its EV business, Ford remains committed to its electrification goals and continues to invest in new technologies. Ford's hybrid vehicles have been well received by consumers, offering a balance between fuel efficiency and performance. The company's hybrid lineup includes models like the Escape Hybrid, Explorer Hybrid, and the upcoming Maverick Hybrid. These vehicles cater to a broad range of consumers, from families to small businesses, making Ford a versatile player in the automotive market. The anticipated decline in interest rates later this year is another positive factor for Ford. Lower interest rates can boost consumer spending on big-ticket items like cars, making them more affordable. This trend is expected to benefit traditional automakers like Ford, which rely on consumer financing for a significant portion of their sales. Additionally, Ford's valuation is relatively low compared to its peers, making it an attractive option for value investors. The stock's forward price-to-earnings ratio of 6 suggests that it is undervalued, providing potential for price appreciation. Ford also offers a generous dividend yield of 5%, making it an appealing choice for income-focused investors. Despite these positives, Ford faces challenges, particularly from fast-growing EV rivals like Tesla. Tesla's innovative approach and strong brand have disrupted the automotive industry, posing a threat to traditional automakers. However, Ford's established presence, diverse product lineup, and ongoing efforts in electrification and autonomy provide a solid foundation for future growth. To sum it up, the comparison between Nvidia and Ford provides a fascinating insight into the current investment landscape. Nvidia, with a current price of $129.61 and a staggering market cap of $3.19 trillion, has dominated the AI and GPU sectors, boasting a revenue of $60.92 billion and an impressive gross margin of 75.29%. However, despite these stellar figures, Nvidia offers no dividend yield, which could be a downside for income-focused investors. On the other hand, Ford, priced at $11.94, may seem modest with its $48 billion market cap, but it shows significant potential with a substantial revenue of $176.19 billion. Although Ford's gross margin of 8.55% pales in comparison to Nvidia's, the automaker compensates with a robust dividend yield of 5%. This makes Ford an attractive option for those looking for steady income alongside growth potential. especially as it continues to make strides in the EV and hybrid vehicle markets. This shift from high-growth tech stocks like Nvidia to more traditional value-oriented stocks like Ford underscores the evolving strategies of savvy investors. What are your thoughts on this trend? Share your insights in the comments below. In conclusion, while Nvidia remains a powerhouse in the AI hardware space, the recent shift in investor sentiment highlights the importance of diversification. By rotating out of high-growth stocks like Nvidia and into more stable dividend-paying stocks like Ford, investors can balance their portfolios and potentially enhance their returns. As always, it's crucial to conduct thorough research and consider your investment goals and risk tolerance before making any decisions. What do you think about Nvidia's future in the AI industry? Are you considering investing in Ford or any other traditional automakers? We'd love to hear your thoughts in the comments below. Thank you for watching Simple Investing Secrets. If you enjoyed this video, please like and subscribe for more content on stocks, the stock market, and financial strategies to help grow your net worth. Stay tuned for our next video, where we'll continue to explore the world of investing and uncover more secrets to help you achieve financial freedom.